Is your money about to become worthless? BlackRock, the world's biggest money manager, is signaling the collapse of the dollar.
Foreign ministers from some of the world's major economies are meeting in Russia. The BRICS group, as it's known, is aimed at challenging the US-dominated world order.
China and Russia are hoping to end the dominance of the dollar, planning $260 billion worth of trade in their own currencies.
International Monetary Fund's data reveals that US dollar's dominance as the world's primary reserve currency is slowly eroding.
When I talk about this statistic, I get frightened. In the year 2000, the U.S. deficit was $8 trillion. Today, it's $34 trillion. I think that speaks volumes of what's happening in our country today.
BlackRock suggests the use of bonds to safeguard US dollars, proposing options such as a bond fund or ETF for diversified exposure.
The US dollar is on its way out as the top global currency. And guess who's pushing this shift? Yep, you guessed it, BRICS countries. Now, you might be wondering, what does BlackRock's warning mean for the average American? Could this really be the end of the US dollar's supremacy? Or is this just a political move by Russia and China to shift the global balance of power? Why are so many countries eager to join BRICS and abandon the dollar? And finally, is the petrodollar era coming to an end? So, let's dive in. Larry Fink, the CEO of BlackRock, one of the planet's largest and most influential asset managers, recently issued a huge US dollar warning that has captured the attention of economists and investors worldwide. According to BlackRock, the US dollar might be losing its grip as the world's primary reserve currency, which could trigger an earthquake in the Bitcoin price. Imagine a moment in a world where the dollar isn't the king of currencies. Sounds impossible, right? But according to BlackRock, this once unthinkable scenario is now a looming reality. Why should we care about what BlackRock says? After all, they're just another financial giant, right? Well, not quite. With over $10 trillion in assets under management, BlackRock isn't just any company. It's a behemoth with its finger on the pulse of global finance. When they speak, markets listen, and their latest pronouncement is causing quite a stir. So what exactly did BlackRock say? They've confirmed that the BRICS nations Brazil, Russia, India, China, and South Africa are taking definitive steps to move away from the US dollar. This isn't just idle chatter. It's a clear sign of a tectonic shift in the global financial landscape. The core of Fink's concern revolves around the ballooning US national debt, which has surged past a mind-boggling $34 trillion. And at current rates, the debt is growing by a remarkable $1 trillion about every 100 days, equal to roughly $3.6 trillion per year. To put it into perspective, if you spent $1 million every single day since the birth of Christ, you still wouldn't have spent $1 trillion by now. BlackRock's CEO points out that this colossal debt and rising interest rates could end the US dollar. Specifically, Fink told Forbes that the situation is more urgent than I can ever remember. But why now? Why is the dollar's decline becoming a pressing issue today? Historically, the US dollar has been the world's primary reserve currency, a safe haven in times of economic uncertainty. Nearly 2/3 of global reserves are held in dollars, a staggering testament to its dominance. Yet, despite this towering status, cracks have started to appear. Countries are increasingly wary of being too reliant on the dollar. Central banks have been quietly but steadily shifting their reserves into other currencies, including the Chinese renminbi and even smaller currencies like the Australian and Canadian dollars. This diversification is a strategic move to mitigate risks associated with the dollar's volatility and the US's fiscal policies. But BlackRock isn't alone in his concern. Jamie Dimon of JP Morgan Chase has also sounded alarms, describing the debt issue as the most predictable crisis. The implications are clear. If these financial titans are worried, shouldn't we be too? Is your money going to be worth less? Imagine waking up one day to find that your hard-earned money has lost a chunk of its value. This is the kind of scenario that BlackRock's warning is hinting at. But what does this mean for you, the everyday American? It's not just about numbers on a screen or stock market jargon. It's about the bread on your table, the roof over your head, and the car in your driveway. It's about your kids' education and your parents' health care. It's about the value of your dollar dwindling faster than you can say financial crisis. One major concern is inflation. It's the sneaky thief that steals the purchasing power of your money. Over the past year, prices have been rising faster than a helium balloon at a birthday party. Groceries, up. Gas, up. Rent, up. And your paycheck, well, that's struggling to keep pace, like a tortoise in a hare race. Moreover, BlackRock's involvement in global markets, including significant investments in China, has added another layer of complexity. Some critics argue that BlackRock's global strategies might not always align with the best interests of American consumers. This raises questions about where your money is being invested and whether those investments are securing or jeopardizing your financial future.
This year looks very promising from the BRICS growth perspective.
2024 will be remembered as the turning point for the collapse of the US dollar.
For decades, the US dollar has been the undisputed king of the global financial system. It's the currency in which oil is traded, and it makes up over 60% of global foreign exchange reserves. When we talk about the dollar, we're talking about the bedrock of international finance. But what happens when cracks start appearing in this foundation? Russia and China, two giants in the geopolitical arena, have been making headlines with their ambitious plans to undermine the dollar's dominance. But why would they want to topple the king? For Russia, it's about reclaiming its power on the world stage and sidestepping the crushing weight of US sanctions. For China, it's a strategic move to expand its influence and secure a more significant role in global trade. These motivations are more than just economic, they're deeply political. Picture this: in the grand chess game of global politics, de-dollarization is a power move, a check to the US's long-standing dominance. Russia and China have been busy gathering their allies, encouraging them to ditch the dollar in favor of alternative currencies. And it's not just talk. In recent years, Russia has significantly reduced its holdings of U.S. Treasury bonds, while China has been actively promoting the use of its yuan in international trade. The numbers are telling. The BRICS countries collectively hold more than 40% of the world's population and account for about 23% of global GDP. That's a massive chunk of the world's economy looking to shift away from the dollar. That's not just a drop in the ocean, that's a tidal wave. And it's not stopping there. Countries like Saudi Arabia and Argentina have shown interest in joining BRICS. Imagine what happens if major oil producers decide to sell their black gold in currencies other than the dollar. Could this be the death knell for the petrodollar?
Well, Saudi Arabia has decided to terminate its 50-year-old petrodollar agreement with the United States. As per reports, the deal was signed on June 8, 1974, but has expired on June 9, 2024.
The Crown Prince of Saudi Arabia has decided to not renew its partnership with the US and instead will open up the Saudis' lucrative oil trade to other countries and currencies.
And trust me, that's a massive blow to the US dollar's status as the world's reserve currency. The petrodollar system that has been the bedrock of global finance since the 1970s, when the US struck a deal with Saudi Arabia to trade oil exclusively in dollars. This created a massive demand for the dollar and solidified its position as the world's reserve currency. But what if that foundation starts to crumble? It's like watching a giant Jenga tower pull out a few key pieces and the whole thing could come crashing down. But why would countries risk such a drastic move? For many, it's about escaping the shackles of US economic policies. Countries like Russia and China are tired of being at the mercy of US sanctions and financial pressures. By trading in their own currencies, they gain more control over their economies and can avoid the geopolitical strings attached to the dollar. For instance, during the height of US sanctions, Russia pivoted to selling oil in euros and yuan. This was a bold move, showing that alternative systems could indeed work. Moreover, joining BRICS offers countries a seat at a new global table. They get to be part of a group that promises more equality and mutual benefits, as opposed to the Western-dominated financial systems. The allure also comes from the potential stability BRICS can offer. The International Monetary Fund and the World Bank, primarily influenced by the US, have often been criticized for their stringent loan conditions. BRICS offers a new development bank with policies that are seen as less invasive and more cooperative. This is like a breath of fresh air for developing nations looking for financial support without the heavy baggage. And here's a kicker. China, the heavyweight in BRICS, has been aggressively pushing the yuan on the global stage. From creating the Belt and Road Initiative to signing currency swap agreements with various countries, China is setting the stage for the yuan to become a dominant global currency. So could we be witnessing the end of the petrodollar era? It certainly looks possible. If more countries follow suit, and if major oil producers start accepting payments in currencies other than the dollar, we could see a massive shift in global finance. The US dollar's reign might not end overnight, but the cracks are definitely starting to show. In the end, the allure of BRICS lies in the promise of a new world order, one where the financial playing field is leveled and countries have more control over their economic destinies. As more nations flock to this rising power block, we might just be on the brink of one of the most significant financial transformations in modern history. Are we ready for this brave new world? Only time will tell.